Ethereum up over 46% in the last month and outperforming all majors by a wide margin. And we look at the strategic ETH reserves. Bitmine is at over a million ETH reserve with almost $5 billion worth. SBET at 600,000 ETH now. We're buying 77K over the weekend. Bitmine bought 317K over the weekend. So clearly this trade is going to keep going on. The treasury companies still make sense and a lot of people are funding them. The MNAVs still look healthy. So the question I had to you guys is like, are we going to continue seeing this or like are we going to see a third maybe come into the ETH world with the treasury companies, or is it really just a race between Bitmine and SBET to accumulate more ETH? What's up, everyone? Welcome back to Shoot the Shit Pod number 11. I'm your host, Matthew Nay, and I'm joined here by the Enterprise team with Sam, Chris, Andrew, and Kenji. Today is August 11th. It's around 2:30 p.m. We have a loaded agenda. We're going to talk about some macro, CPI expectations. Are we going to get a rate cut in September? ETH outperformance from DATS. Zora still making waves. Succinct's Prove launched last week. And then we'll always finish up with what are we doing on chain? Looking at TradFi, the S&P pretty flat on the month, up around 2%, just underneath that 6,400 handle. Hood at almost 16%, gold pretty flat, and coin down 17% after missed earnings in Q2. Over to Bitcoin and ETH, we have a 4% on Bitcoin, just under 120. ETH at 4,300, up 16% on the week. Sol only up 5%, and Hype up 13%. And then Polymarket is pricing a 73% chance of a 25 basis point decrease. So we had a weak jobs report come out a couple weeks ago. What are we seeing in macro? And I'll kick it over to you, Andrew, our macro expert. What are we seing from the macro land, and what does this mean for our coins?
Yeah, so we got the first big economic data release since the weak jobs report earlier in the month. Core CPI is supposed to come above 3% tomorrow, but still broadly trending down. I think the big question this time around is how much tariff-induced inflation is going to start filtering through to prices, and how much of that's either going to be offset by cooling shelter inflation as rents have been coming down, and then overall kind of a slowing economy effect. My base case is that, like, unless there's a huge burst of inflation from tariffs, I think the market's probably going to look through any volatility on this number, just like it did with the jobs report. Off the weak jobs, I think S&P went down like some 3% from all-time high and is basically already back there. I think people are largely okay with the fact that the economy is slowing but not falling off a cliff. Inflation is like, there's been some broad disinflationary forces at play, and then there's this like general uncertainty about how much inflation tariffs are going to cost. And I think you could call that complacent, or the market's just okay with that and it's kind of looking through it. The only way I see tomorrow as particularly risky is like we suddenly get this huge hot number tomorrow and the market entirely underpriced how much tariffs would flow through and just got really complacent about that. But outside of that, I would anticipate any like de-risking and volatility tomorrow to be kind of shaken off eventually. And then beyond CPI, I think we're pricing in like 86% chance of a 25 bip cut in September. I think the market's largely okay with like one or two cuts this year, as long as growth doesn't like fall off a cliff or tariffs don't cause a surge in inflation. So all of those things are kind of in the same spot as they were even last month. We're like still digesting the fact that those job revisions were so negative. But yeah, we've largely shaken that off. The only other thing I've been looking at or thinking about that isn't just like a macro number or print is the fact that we got GPT-5 released the other day. And I think the reception has been broadly pretty bad. You know, the AI doomer thesis about how like LLMs are going to take most of our jobs in 2 years kind of rests on this on the scaling laws that say like we're going to see like multiple orders of magnitude increase in their effectiveness in like literally the next 2 years. And it's possible GPT-5 was just like a singular fluke, like not a great product, and this will be remedied in the next model release. or they'll fix it. But it's an interesting counterpoint to like how far the AI trade can run. And I would say, given that, a lot of the stock market performance is just like concentrated in the top 10 stocks and concentrated in hyperscalers that are highly dependent on this AI trade, like continuing to run. It's something like a risk factor we should be paying attention to. If the improvements in these models like aren't going up at the rate they need to for that thesis to really play out and for all of this capex to be worthwhile for these companies, then I do think that's like one of the primary risk factors for the market outside of just like, employment growth and inflation and those types of things.
I mean, I know this is like obviously incredibly hard to predict, but I mean, do you think the maybe reason for the underperformance of some of the new stuff coming out is just like we're slamming compute, we're slamming data, but like we haven't had massive algorithmic breakthroughs? Like, do you think that if we get one of those, it's just going to be like kind of off to the races again? These companies will be, yeah.
I could totally see this being like just like a bump in the road as well. Like maybe this is partially like OpenAI and these other companies also trying to manage their burn rate as they like accelerate and scale and like manage how these models get better in a cost effective way. And maybe this is the first trip up that they've had while trying to contain costs, because they're routing, they're routing your prompt based on some algorithm. And for the most part, people are not liking it versus O3. And so maybe that means like they're routing a lot of things that need more complex reasoning to a shittier model to save on costs. And this is like the first glimpse of, oh, like maybe the $20 I'm paying per month actually can't afford me like O3 output on a regular basis at like 50 prompts a month, or whatever the limits are right now. So yeah, it totally could. Like, what if, behind the scenes, we might have some algorithmic breakthrough that like once again flips it back in the other direction. I could totally see that happening.
It also seems like the multimodal stuff is getting really good. Like the stuff that what's it called, Genie 3? I think the one that Google released. Like to me, that looked crazy. I don't know. You know more than I do in this regard, Andrew, but that seemed like kind of an insane breakthrough for multimodal.
Oh yeah, the interactive world stuff.
Yeah.
That I don't know. That blew my mind. So on the one hand, you have this like, okay, there's always going to be people complaining about like maybe this aspect of it got worse, but clearly behind the scenes and I imagine that the things that they release to us are kind of a fraction of what's being built. That stuff. Yeah, the video and the interactive world stuff is like pretty mind blowing. You could see like that's not really going to be reflected in like economic growth numbers anytime soon or used at scale in a way that would like generate a ton of revenue right away. But like clearly a huge advancement. So it's like when do those gains occur? It's hard to say, but clearly a lot of big stuff going on.
Yeah, let's kick it over to the ETH outperformance that we've really been seeing, really leading from all these digital asset treasury companies that are just accumulating Ethereum as scales we haven't seen. We're seeing Bitmine or with Ethereum up over, I don't know, 45, 46% in the last month and outperforming all majors by a wide margin. And we look at the strategic ETH reserves. Bitmine is at over a million ETH reserve in their ETH in their ETH reserve with almost $5 billion worth. SBET at 600,000 ETH now with buying 77K over the weekend. Bitmine bought 317K over the weekend. So clearly this trade is going to keep going on. The treasury companies still make sense and a lot of people are funding them. The MNAVs still look healthy. So the question I had to you guys is like, are we going to continue seeing this or like are we going to see a third maybe come into the ETH world with the treasury companies, or is it really just a race between Bitmine and SBET to accumulate more ETH? And where do we see this going? Does this flood onto on-chain and does some of our DeFi alts and other coins like in actual that we're interested in and deep in the weeds, is this capital going to flood to those coins?
I kind of don't think, having multiple smaller copycats matters as much as the performance of the top two. And so if Bitmine with Tom Lee is up, 20% just today and their MNAV's at 1.5, I would rather bet on this like trend continuation just based on BMNR and SBET doing well rather than like, oh, this other company raised 100 million to buy a little bit of ETH. And so, yeah, I would just continue to gauge the health of this based on how successful they are. And my main point, I think, from this is that one, there's still institutional demand for those stocks, and two, the stocks themselves and the companies behind them, like they have a lot of untapped financial engineering they can do, like copying a lot of things out of Saylor's playbook that could extend this further than people think. And the fact that they have staked ETH and possible like DeFi applications they can tap into for yield maybe makes it even more attractive versus Bitcoin, like from this treasury company perspective and the things that they could do with it. So that's all pretty bullish as long as those like MNAVs trade at a premium and there still seems to be a bid for them, which seems to be the case, which bodes well for ETH in general.
Yeah, I largely agree that like there's still room to run. I think like the way I was thinking through it is we've discovered or rediscovered maybe or discovered TradFi's appetite to bid crypto, but you don't want to overthink like their sophistication. I think they know Bitcoin is kind of this separate store of value asset, and then there's all these other things like DeFi, consumer, whatever, but they don't know how to pick the assets within that, and ETH becomes the easy beta for them. I think Chris was telling me he was talking to people saying like they just view, or TradFi just views ETH as a DeFi play, which makes some sense. So they're not going deep down into should I be picking Solana or should I be picking ETH? And as long as that happens, then that bodes pretty well for this continuing. Moving kind of or slightly pivoting to like the eco as a whole, I think as long as the treasury company trade runs, the ETH Go trade makes a lot of sense too. Two kind of reasons for that. But the big one is like fundamentals look really well as long as the ETH price goes up. So almost everything in DeFi is the underlying action is determined by if people want to buy and hold ETH. So like all the lending protocols look great when people want to lever up to buy more ETH. Their TVL goes up, their fees go up, and that starts to look attractive. Second, like all the dexes look really attractive when people have some extra spending capital and they want to go on the long tail. And so they start using dexes, those fundamentals start looking great. So it makes sense for there to be like attractive signals within the eco. And then another part of what these treasury companies are doing that also bodes well for the eco is by proving out a TradFi buyer base, you now have protocols trying to think of how do I actually tap that? And they have to not redesign, but tweak their token to make it look attractive to those buyers. So I think that's why we're getting like the Link announcement. That's why we're getting Athena trying to spin up a treasury company. That's why we're getting, I think Layer Zero just also did a revenue buyback. But if you want a more sophisticated investor base to come and buy your token, you can't just have it purely based on vibes. You need to have something they can model. And by adding these buybacks, that makes sense. So we're moving closer to like traditional value capture, which I think is ultimately good for the ecosystem and hopefully can unlock some new buyers. Maybe it's more assets open up to liquid funds. Liquid funds have a wider variety of tokens they can pitch and buy. And then maybe for the larger ones, TradFi can actually move in there. But so far, everything feels fairly positive in the ETH landscape.
Yeah, I would say another interesting component of like actually like these companies sort of coming on chain is the staking and restaking sector. So you have Lido, which is now starting to catch a bid. Like you're seeing all these ETH treasury companies starting to put their ETH in there to get a little bit of yield. You're starting to see that spill over a little bit to the restaking. So like you have EtherFi. There's one other one that is getting a lot of inflows. And so that's interesting because like you look at these tokens and just for a while, they've been kind of bidless, and I think like for Lido, there's specific reasons for that. Like they had crazy unlocks too. So people were just getting like inflated away on that, but now it's fully unlocked, right? So I think it'll be interesting to see like, does this stop here? Is there like more ways that this can be then leveraged in DeFi? Because you're starting to kind of see this like thesis come together, right? And for a while, like ETH price was going down, right? Like the actual revenue of these companies, like it wasn't looking great. And there was kind of like a soft cap on how much ETH can actually get deposited into here just based on what people owned. And I think that we're seeing that cap get completely lifted in a way that we have never seen before. So these can start to look more attractive too, just from like, investment standpoint.
I think another interesting thing and I know it kind of concerns retail who doesn't have a lot of capital right now, but we have like such a different type of wallet or exchange offering now than we did in 2021. Like you can do almost everything on DeFi with just like Phantom and Rabby, and it's so easy. We've just like 10x abstraction and aggregation. Like I saw someone tweeting earlier this week, and they were like, "Whatever happened to like the abstraction narrative? Like, why did we drop that?" And I'm like, "We've made significant progress. If you go on Phantom or if you go on Rabby or if you go on the base app, they're so much more intuitive now than they were in 2021." So I think if we get to a point where like retail starts to come in like a little bit heavier, which I think usually happens at the tail end of like a bull cycle, it's going to be so much easier for them. It would be a more opportune for them to get to DeFi now than it would have been in 2021.
As we see like more just the abstraction away, we're going to see Coinbase natively support Aerodrome, Morpho in their app. All Aerodrome pairs are going to be tradable on the Coinbase app. They'll also have some support for some Solana protocols, not sure which ones. You can probably think of the majors, any Radium, Jupiter, but we know for sure they're probably going to pick Aerodrome and Morpho into their app. So that kind of leads into the next question: like, are we going to see a divergence between last cycle ETH DeFi coins and where that we're talking about Chainlink, Aave, Lido, or in Uniswap, and do we see some outperformance from the newer gen, next gen stuff that's really in the base ecosystem and or with restaking with EtherFi, Athena? And Aerodrome and Morpho, I think, are very easy ones to kind of get yourself into that bull case for those tokens. But are we going to just see all ETH DeFi? Are we going to see these institutional be able to decide between what's an actual newer gen, what's going to be what users are going to be using within the Coinbase app, or are they just going to go and kind of like where we see the boomer coins go up X% with Ripple really getting bid recently this cycle, or what do you guys think from that, like from new gen versus old last cycle DeFi coins?
I don't think it matters new gen or last cycle. I think what we're finding is this cycle, the buyer base is very different from the last cycles. Last cycles, it was just, can you get like paint a great story for retail to come in? This cycle, retail bids you up to like $1 billion, but then if you want to move on from there, it's TradFi or liquid funds, and they're looking for a completely different story than what retail's looking for. So maybe I'm a little too mid-curving a little too much, and I'm a little too optimistic, but I think you actually have to build a good product if you want to have a crazy run. So to your point, there is selection risk. I don't think it's on, what generation was this app launched. I think is this app proving out that it actually has some usage, and can I imagine a world where I get paid back one day, whether that's through buybacks or, no one does a dividend, but something like that. But yeah, that's how I view it. I don't know if anyone else thinks differently.
Yeah, I was going to say something similar. Like, I'm not really seeing much difference in performance versus in old versus new within this like ETH DeFi subsector right now. Like Lido's done pretty well off the lows, and like a lot of these have similar charts, I would say, like kind of beaten down, but like been trading in a range for like many months. So I don't know, like I wouldn't have a strong preference for one over the other, even though like 80% of this cycle I would have said like, new over old like every single time. But now it just seems like we might finally be getting some of that like wealth effect that we initially anticipated with the BTC ETFs that we never got. Now that ETH has this kind of like structural bid for a bit, I don't think it'll apply to everything, but I will like within anything kind of ETH DeFi related seems almost equally attractive as long as there's some value accrual thing going on, to me at least.
Yeah, I think it, your point speaks to, I guess, like how new these things are, right? Because like the charts are beaten down pretty bad. A lot of these things probably that like we're talking about as new probably launched in at latest 2024. So there's still a lot of time for these to go down. Like I see the new stuff as more of like maybe the stablecoin yield agents or something like that. Like that's kind of like the new generation DeFi, right? So you're not necessarily in a position where you're like, okay, I can bid the shiny new object or I can bid something old. Kind of like in all of these DeFi protocols we just talked about, they have like the charts of an old protocol, right? So then I think it does like exactly what you and Kinji laid out. It like depends on, it's like very idiosyncratic. Like what does this business look like? What do they do? How much value do they capture? And I think people will just be looking at that a lot more than just, I'm going to bid the shiny new narrative chart. When it comes to like a lot of money bidding, like obviously retail will bid the shiny new stuff.
Yeah, then I think where we can go next is the age-old debate, little spicy topic where we compare. There's also a little saltiness on the timeline on the Sol ETH chart, and if we look at it from year to date, Sunny might have called it perfectly so far. Sadly for me, as writing the Solana quarterly, Sol ETH is now down 25% on the year, and it has really just gone quicker, down more as this ETH rally has really just been ETH itself, and so. I know we've seen some bullish technical stuff from Solana with Jito Bam, their roadmap to really bring on-chain perps. And I still believe if there's a team that can do it, it's going to be the Solana team. Engineers are cracked, but they don't have the institutional bid like Ethereum does, clearly, as we've seen from these DATs. And there is no true DAT on Solana. There's a couple, but no one's really taken the cream of the crop and is on CNBC, all these news networks, just shouting ETH from is going to go to 15K. There's no one saying Solana to 1,000 on these institutional marketing ways. And so, like, where do we see? Is this going to continue throughout the year? Is Sunny going to be right for this entire year with the Sol ETH performance, with the base eco really performing? And so, what do we think this means for the Sol ETH chart? Are they going to slowly get on chain and realize the tech is better, faster, quicker, cheaper on Solana, or does that not matter? Is it just the way that the narrative is right now?
I don't think it matters. I mean, I think that like in terms of, TradFi bid, I think Kenji might have mentioned this a little bit, but like the amount that they're willing to look into this, like say you're like even like a top fintech analyst, like you've been having to look at stable coins now, you've been having to look at Coinbase a little bit. They don't know the difference between ETH and Solana. And they don't have the time to look into the difference, I think, for the most part, where we're at with the technology. Like for sure that will change over a period of like years, like half a decade. But I think right now it's like very bifurcated. It's like, okay, BTC, and then you have everything else. And the everything else that I know about that's a bet on DeFi is, so I think in like you would have to get like a very strong Sol renaissance, which is definitely not out of the question. But I think as long as this ETH DAT is like this narrative is being pushed and like, as you said, like people are going on TV and like calling crazy price targets, right? Like I think until that wears off, we won't see like a meaningful rotation back into Solana. Not to say that the things on Solana are dead. Like for sure they're not. Like I'm actually very bullish on Pump personally, but in terms of like, just Sol price, just ETH price, and like directionally where that's heading, I think it's still going to be ETH for a while.
I think it's an interesting discussion when you frame it through the Jito update. So Matt, tell me if I'm completely wrong here because you're the Sol guy. But I kind of interpreted that as like step one in a long roadmap to get to app-specific sequencing with multi-concurrent proposers that allows you to build a perp dex on-chain. Like theoretically, you could do it just with the Jito update, but like it doesn't have to work because the leader can still censor you. So you'd basically have to convince the leader, like actually taking the tips from this Jito valid or router is more profitable than you like extracting MEV on your own. I don't think that'll happen like in the near term, but like once you get multi-concurrent proposers, then you can actually like build all these perp dexes. And so like it's phase one in the roadmap. And we've seen with ETH, the market does not care about your roadmap. Like they only care about your product to a certain extent. So Solana ran up on the theme of we're decentralized NASDAQ. And I think most people would agree like Hyperliquid has come and taken that. And that doesn't mean Solana can't catch up, but the market doesn't care. Like the market just doesn't care until you have caught up or there's like a new catalyst for new flows. And so to me, the Sol debate is almost the exact same as like the old ETH Sol debate from like 2 years ago, but reframed with Sol and hype. So like Sol has to do a lot of work to catch up, but the market won't care until you catch up or until there's like some new flows coming through. And so there's not to say like that can't happen in the future. Maybe we get a huge treasury company coming in or some guy just gets on CNBC and is like, I'm dumping all my billions into Sol, whatever, something can happen, but I don't think there's like an obvious reason for it to happen yet.
Yeah, I would totally agree. And that roadmap is still, I like the way you phrase it, like step one, and they still need teams to come in and the way they're phrasing it is plugins. And for an easy example for a plugin is an on-chain perp dex like Drift can either give speed bumps or speed boosts to makers or takers. So a maker can get higher up on that priority in that bundle and cancel their order before some shark is able to come in and grab some stale order flow. And then there's also a ton of other plugins that they use, but like that's still day one, and we're still going to see that come out through the end of the year. And then with Alpenglow, probably early 2026, maybe their goal is 2025, but Yeah, that's the way I'm looking at it. Is ETH is the narrative right now. There, you might be contrarian and might pick some winners in the Solana ecosystem. Pump could be one. I still think Pump comes back, but a lot of the intention has moved over to the ETH, and yeah, we need some digital asset treasury. We need some performant perp decks on Solana before the narrative flips. And I sadly might agree with everyone where the stuff is going down on Ethereum right now. Regardless of the tech, still think the tech is way better on Solana. The narrative currently is over, especially in the base ecosystem. So I think we could kind of rotate over to Zora, just killing it. Continue almost at $1.5 billion FDV right now, 500 million market cap is shot up 91% over the week. So we caught some slack or some flack in the Slack from our fearless leader, Average Joe's Crypto, about bear posting Zora our last episode, and on the record, I guess we were proven wrong, but maybe in the order books we were proven right with the performance that it has had, and I think a lot of us have played with the app, and it's pretty fun. I mean, it obviously helps narrative when price is going up, but and then so yeah, what do we guys think about this Zora outperformance? Is this going to keep running? Is this just a certain subsection of holders pushing price up, and just in large with the base ecosystem plays? Like, what else are we looking at? But just in particular, Zora has been crazy.
I think it's inevitable that this, if we run, if ETH ecosystem sees pretty heavy inflows, Zora is gonna be one of the leaders, just in terms of outperformance. I don't know, Average Joe kind of set it up as though it was a Goldilocks scenario, and I almost think that kind of continues, right? Because they're taking up Coinbase app real estate, which is very valuable, given just the sheer number of users that Coinbase has and the influence that they have. It's being shilled to Coinbase shareholders, more or less. It's a part of their quarterly reports. It's just it's crazy. I don't think we've ever had a situation like that where you've seen such a nascent app be enshrined into one of the biggest exchanges. So I would say from that perspective, we're almost in uncharted territory if you want to throw out some crazy valuations. From the SocialFi perspective and how valuable is SocialFi, I am maybe a little bit less bullish on SocialFi taking over the world. I think it's a super interesting concept. Zora is actually a pretty fun app. I think maybe it's a little bit more turning the finance stuff we have in crypto into content, as opposed to taking all of content and financializing that. But I don't honestly even think it matters. I think that we're going to see something akin to virtuals at the end of last year and the whole AI agent run. It's pretty clear that this has a pretty similar token dynamics. It's catching a similar narrative. So I'd expect to see creator coins, catch a lot of attention as well within the next month or so.
I feel like the virtual comp is pretty interesting because I feel like fewer people faded that, or there was less. It was the main thing going on at the time. But for Zora, everyone was pump versus bonk. That was the primary discussion. And it was you're kind of betting on one or the other. A lot of people were super heavy into pump, thinking it'd be, myself included, thinking it'd be an easy 2x, which it was not. But that circumstance was interesting from a positioning perspective, because I don't think as many people got involved at all on this as they otherwise, if pump and bonk happened I don't know, a month before or a month later, then I think more people would have hopped on Zora and been more bullish. But I think vast majority of people just don't have any exposure, and it's kind of interesting when it's literally the fastest horse, and everyone always talks about just winners, average winners, just long the fastest horse, and this one just feels people come up with reasons for why not to long it, and whether that's fundamental ones or they don't like creator coins, which we probably talked about on our last pod, or the fact that it's just up too much in a month or two. So I find it interesting from that perspective. I don't really have many thoughts on the actual token design or creator coins or SocialFi in general. I think it's interesting from a positioning perspective, and the fact that ETH is really strong and Coinbase distribution is a huge plus, and it's kind of singled itself out as the top performer. So I don't know what, during a time where everything's risk on, like why would you not bet on that? That, I don't know. It seems straightforward to me.
Do you think that people like really caught the virtuals run in a meaningful way, or do you think that still took people off sides once it got to like a billion market cap and everyone's like, oh, this is clearly the narrative now? Because I felt like looking back, there were actually a decent amount of people off sides.
I feel like always, like on the first run to a billion, like only a select handful of people are like catching that in any degree of size, because like you don't really know. But if you're super early and you got in sub 100 mil, and like you can just hold pretty comfortably. But at least people were paying attention to it, and like they were throwing it into the acronyms they were making up, like like they would mention it in the same occurrence as like Hyperliquid and it, like, or Athena, like. But Zora's, I've only just today saw Zora on one of those spaghetti charts of outperformance. Like that was the first time, and like no one has posted it really. Like outside of, I know, Average Joe's, and then like probably one or two other people on CT have been like aggressively bull posting it. So yeah, I'm getting the vibe that it's even more underexposed than the AI meta at the time. Just because there was a lot of distracting things going on like other major narratives, namely the launch pads, and then two, kind of overall cautiousness like across the board, like BTC going from the initial all-time high run from like 120 to 123 to 112. Like people were calling for much lower as usual, like every time. So yeah, I feel like people didn't really want to deploy in that time period overall.
That's a good point. I find it also interesting that I just thought of this while you were talking about it. Like the frameworks there were multiple frameworks that were competing that were like legitimately which one is going to be the best one. Like what's the play here, right? And like I know like virtuals was kind of more of a launchpad play, I think, for the people that like thought about it a little bit deeper. But then there were a lot of people who were like, this is a framework, AI16Z is a framework. What the other one that we all bid, I forget what the name of it is. Do you guys think that's bullish or bearish that this is just Zora and there's really no other like SocialFi like competitors? Yeah, that it can just hit all the flows.
I think that like you look at, I mean, it also like to like the same extent that ETH and Bitcoin kind of get to bounce back between narratives, right? Of like being digital gold or of being like or like with ETH, it's like the world supercomputer, and then it's like oil, and then it's whatever. Like you can do the same to a much lesser extent with Zora, with it being a launchpad versus it being SocialFi versus it being like CB beta. So I think that like it has all of the tailwinds you could ever want for just like a killer investment, and it's the only like SocialFi player. So that makes it even more interesting to me that like people aren't talking about it, or like that we aren't seeing like heavier inflows because of how much beta there was in agents. So maybe when we start to see more SocialFi beta, that's like a confirmation of the thesis. I don't know.
Yeah, I think you could compare it to the like Sol ETH debate too. Is like where Solana has like a war on two fronts. It's always fighting ETH, but then it's also seeing like in its rearview mirror quickly hype and coming up and stealing a lot of flows and a lot of like similar narratives. And where then you saw that with like the launch pads on Solana. Pump Fund dominated forever, and then all of a sudden in their rearview mirror was Bonk right on their heels. And now they quickly had to go and fight Bonk for market share, which they have won. But while they were fighting that, then Zora popped up and has now taken a lot of that mind share. And Zora is kind of like this was in like this third place behind Pump and Bonk, and now is quickly past mindshare and is outperforming Pump on the week and month and everything. And I think it was like just everyone was like, oh, Zora had a weird launch with some like it was just a little weird on the Twitter line about like how they launched and all their branding and everything. Really didn't know what it was, and then chilled out for a couple of weeks on the sidelines, and then they decided, hey, we're going to be the SocialFi creator coin place. And yeah, I think everyone just saying like go throw $20 in it and play around with it, and it's pretty fun. But like I think there are everyone still has like the same reserves and is like still like, oh, it's the fastest runner, so we're gonna keep bidding it. Where do we still see this outperformance from Zora, or with Pump finally meaningfully for a couple of weeks now kind of getting that market share back? Or are we going to see maybe some Pump outperformance? I know, Chris, you're a big bull still on the SocialFi side of things for Pump, but is Pump going to lean more into the SocialFi stuff, especially with the Zora mindshare that has increased over the last week or 2 weeks?
Yeah, I mean, my take is that like Pump doesn't need to like lean into it necessarily. I think that like what they're doing from a social perspective makes a lot of sense. I mean, I think, and I've debated that so much with Average Joe Scripto about this, but I think that it's a lot easier to go from trading into social than social into trading, and it seems like Zora is kind of doing the social into trading thing. I think that Pump is like very well positioned to do streaming because I view Pump as more of an entertainment company. I think that like financial streaming is going to absolutely blow up in the same way that gaming streaming has blown up, and I think that's a very natural pairing when you view Pump as like sort of a gaming entertainment company that's like literally birthed one of the most addicting games in the world that like normies already love, right? So to me, it makes more sense as a pairing that topping this kind of like putting SocialFi on top of the layer. And I think that, I think they'll start to lean a little bit heavier into like chats and friends on the Pump app just to kind of like create this like tight knit ecosystem that slowly becomes more of a social thing. But I mean, yeah, I don't know. It's hard to say. I mean, Zora's strength is like, it's very, very strong, right? I mean, to me, I do discount, like, I'm not a huge believer in the creator coin thing. I just like, there's a lot of reasons like psychological user behavior, like reasons why I don't think it can necessarily succeed, or like people are putting the TAM way too high. But as literally everyone just said, like it's the fastest runner. There's a ton of reasons for the coin to go up. So I think I think the rotation back into like full Pump mindshare at this point isn't like super likely. I think Zora will continue to outperform.
Yeah, I tend to agree with that. One thing we were talking about earlier was like maybe not having a specific preference of old versus new in regards to like the things that are like beta to these TradFi flows into ETH and whatever DeFi. Like maybe the old versus new doesn't matter there as much as long as it's like they have a story that's connected. But I do think within like on-chain realm, old versus new still matters a lot. And focusing on Sol, Pump, meme coins, it feels like you're kind of fighting the last war. It's like that is where everyone was. And like to harp on it and be like, this is still really important, even though you're getting signs that the flows and the attention's moving elsewhere. It kind of like I would just have a preference for bidding the new thing there in this realm. And it's like in that sense, the framework is like whatever's getting flows from TradFi, which right now is just BTC and ETH. And then two, on the on-chain side, it's like whatever's the new thing. I feel like that's kind of like the safest, not safest, but like probably highest probability of success approach, if that makes sense. Because like, well, yeah, I guess I don't want to rehash the Sol versus ETH debate, but I guess we've already made the points from there. So
Yeah, and then to kind of reiterate everything we said, another big announcement, big launch last week within the Ethereum land was Succinct's Prove token launched last week. And as we're talking now, it's at $1.70, up 25% on the day, which is pretty insane. Launched around $1 billion FDV. Now it's at like 1.7, market cap around 300 million. And so if it launched on ETH mainnet, but it also touches everything. It crosses the border between ETH and Solana. So if anybody is a Succinct or Prove is more knowledgeable on me, feel free to go and kind of give the TLDR on what Prove is, what Succinct is, and how they're doing something really interesting in the space.
Okay. I'm not going to pretend I know all the ins and outs of like how this thing works, but I think it hits a lot of boxes that make sense, that make me kind of bullish in the very near term. So to Andrew's point, it is the shiny new thing on Ethereum. On top of that, I know retail loves it. Like I've got a ton of normie friends who are normally just in the trenches and they're like, yo, just look at the founders. Like this thing's undervalued. So there's like a retail flow there. And then I also think given that we're bullish on the Ethereum ecosystem, a ZK proven network makes a lot of sense. Like ZK has always been a massive part of the long-term Ethereum story in terms of getting like proofs on rollups. It helps with interop. It helps with composability. And if you want this modular world to come to fruition, which is kind of the Ethereum story, then ZK is a very important part of that. And so I don't know if this is like a 10-year dominates this category type of protocol. As an analyst, I should go and find out. But it checks a ton of boxes in terms of hits the narrative on what we're all talking about, has captured some retail attention, and is the shiny new thing when markets are going up. So I think it's interesting. I think everyone should at least go read up on it and try to find out more, which is probably what I'll do after this. But that's just my high level thoughts. Wish I could go deeper. Maybe next pod.
Yeah, I'm in like the same boat where I definitely have like more of a surface level understanding. But we saw all of these like ZK focused L2s that were like marketing the fact that they're like ZK networks, like whether they were like ZK Sync or Scroll, ultimately fail pretty much. I mean, none of them had a lot of volume or activity or like any interesting apps. And so I don't think being ZK is marketable, and it's such a like an intense addition as opposed to like just building an optimistic roll up, that I think it makes a lot of sense for us to have like this separate prover network. So I think, yeah, I might be mid curving by saying I want to see how much revenue they bring in, but I think that is like a little bit interesting because you also have to think about like what happened with Celestia and why it failed. It's just because it brought in so little revenue, and it was
also
so
ripped
overvalued.
before it failed, though.
So to me, I think it did, but I feel like maybe people learned from their mistake, and they're like, well, granted, DA people figured out quickly. They're like, okay, block space is going to be commoditized. I don't think ZK gets commoditized nearly as quickly. Granted, I could be wrong. I don't know, but I think that's something that people might pay attention to this time. And also, we're just like in this like revenue meta, and like fundamentals matter like at the moment. So
yeah, I also think the revenue model's probably just pretty different from Celestia. I mean, again, I like looked it over for 20 seconds, but it seems to me like the revenue is probably going to be coming from like B2B integrations and maybe even like a subscription to keep the prover network going that you're going to offload your proofs to. And that makes a lot of sense, especially if they are doing the best proving, right? Like proving as a service, like it's not commoditizable in the same way that like DA is. I mean, like, of course, there's nuances with DA as well. Like you can argue like Eigen's DA is like better, like has more throughput or like can handle more than Celestia's. But if you really are like the ZK prover that is truly like unlocking super fast proofs for these networks, like in a way that enables new applications to be built on your network, I think that's like pretty valuable. And yeah, I can see it doing well.
Yeah, that deserves to run at a premium, but it's at a $1.7 billion valuation. So I think it's getting close to the point where it's time to start discussing whether it has the most superior technology. And maybe people are having these discussions and I'm just missing them, or it's going to just bring in a shit ton of revenue. Or I'm mid-curving.
Mid-curving over here, sorry. No, just kidding. Either left or right curve. Just depends on which day of the week it is. But I think what's interesting, kind of from like a user perspective, going along with like the ETH narrative and ETH roadmap, is like a user can use some locked up liquidity, whatever it's wrap Bitcoin or ETH and Aave on the L1, and then be able to use a ZK proof to an L2 perp dex and be able to use that as collateral. I think that is really interesting, kind of gets rid of the problem that the L2s had was with the fragmented liquidity. And if they're able to be the infrastructure that powers that, I think it's really interesting. And I think it's a really cool technological feat that this team has been able to use. And so we'll see which teams sign up with it, which teams use it. And I think from a user perspective, this can make using all the Ethereum ecos a lot easier and a lot better, which has always been a downside and just a easy layup to go from the monolithic modularity debate. So this might restart that debate from a new perspective, which could be interesting. I don't know if anybody has thoughts on that. All right, no thoughts. We can go over to Chris. I know you just read a Kaido report on post TGE campaigns and kind of like the performance of those tokens afterwards. So what did you see? What was the TLDR? And do you think people are going to keep using Kaido as this like marketing material?
Yeah, I mean, I don't want to give away too much, but I think that like the TLDR is that Kaido it's pretty good at generating mindshare. Like it does well there. Again, like it depends on, what that type of mindshare is. Maybe it could just be kind of a lot of half-baked posts, or maybe you actually do get some really good posts that are like super deep dive into it. But it does like, in terms of metrics, it raises mindshare. But I think what we saw is that there really is no translation into fundamentals there. Actually, kind of all of them underperform their peers in fundamentals. So looking at competitors within the same sector. And I think, something interesting that I saw was just the relationship between fundamentals and mindshare. So if you look at something really organic, like Hype, for example, like Hyperliquid is kind of like the poster child for organic mindshare and like growth and being, like just fundamentals up, everything up, socials up. you see these really organic movements where you'll have something that happens, like, for example, when the James Wynn stuff started happening, like a ton of transaction volume happening, like completely spiked. And then you see mindshare follow like a day or two later. And that tends to be the Pico top for the price. And then you get that kind of decline, but at the same time, it forms a new price floor. And this is where we're comparing it towards the altcoin market. So this is like actually outperformance of price. It forms a new floor at that point when you actually have people who are like staying in as daily active users. The transactions kind of like the transaction volume kind of settles on this floor. The TVL settles on this floor. And from there, you can actually like grow the protocol more and kind of get new spikes in mindshare and like new events that attract mindshare and then drive price and kind of like kicks off a flywheel. With other campaigns, like we looked at Kaya was one of the ones that we looked at. And you can see very easily in the chart, both for price and fundamentals, the impact of incentives. So you have this incentive program that was meant to drive fundamentals. They were basically pumping their Line mini DApp ecosystem and giving, I think they split $10 million in Kaya across all of the apps that qualified. And they were just giving out Kaya incentives, right? So obviously you're going to get a ton of transaction volume. You're going to get a ton of new users, price and bots like joining the ecosystem. And then when that campaign ended, you just see fundamentals go off a cliff, right? But at the same time, there was this kind of tiny overlap with mindshare where they started their Kaido campaign. And you just see mindshare like pop immediately and be like a complete reverse movement to where fundamentals are going. So what I would say is like from a protocol perspective, if I was considering using Kaido, and again, not to give too much away, but like the ROI on using Kaido is actually like pretty bad. If you were considering using it though, my recommendation would be to pair it with a campaign that hits at the same time so that you get this like huge bump in mindshare week one. And you actually do get like a pretty good continuation for some of these projects. Launch your fundamentally driven campaign at the same time, boost mindshare for that. And then you can have like at least a better relationship between your fundamentals going up, the mindshare going up. And if you have something valuable to offer, then you might be able to kick off that flywheel at that point. But also real quick too, we saw that like the token prices of these Kaido campaigns tend to underperform. There's two theories there. One is that when you start a Kaido campaign, you're basically indicating to the market, like I'm manufacturing attention and I'm giving a ton of people tokens. So that's really, it's not optimal for buyers because they come in and they can't really gauge social sentiment at that point because it's all manufactured. They're like, okay, is this actually gaining traction? Is this not gaining traction? How committed are people? And then you know that you have a bucket of sellers that are kind of come in with a zero cost basis and just dump. The thesis number two is that just these protocols are just underperformers in general, and there's kind of like an adverse selection when it comes to Kaido campaigns. They tended to underperform in the month leading up to it too. So either one of those, like if you're going to run a Kaido campaign, definitely don't be doing it to pump your token price because it's kind of unlikely.
A couple quick shout outs there for the full report. Head over to Messari.io, read Chris's report. Then also head over to Messari.io for the Signals Mindshare API that Chris used a lot in that report to kind of track all the performance of all these tokens outside after the Kaido campaign. But yeah, then we'll start wrapping up here with what we are doing on chain. So I'll kick it over to you, Sam, first. What are we doing on chain? What are you looking at?
Am I allowed to talk about Zora Creator Coins?
No,
is that too low cap?
We can talk about it.
Okay. I think that there's some interesting opportunity on Zora just from like a risk reward standpoint. So I've been tracking some different creator coins. I'm really interested in ZXBT, just classic AI agent making art. Seems like a pretty easy narrative to get behind. So yeah, I like that one. I'm checking out some like other creator coins, anticipating maybe some larger creators getting onboarded. But I mean, apart from that, everything we said earlier, I'm like excited to be back in ETH DeFi land, and I have some like, biddable projects. I think Pendle launching Boros is super interesting. I haven't had like a ton of time to dive into it, but I am definitely like, yeah, that's on my radar. So yeah, DeFi and Zora.
I haven't done too much. I feel like every time I've just talked about Hyper EVM because that's just my main on-chain focus. The last thing I did was Pendle K-Hype market launch, and that got, I think it's like the 6th biggest by TVL now. It like grew really fast. But some people are looping K-Hype PTs. So stake some hype with Kinetic, you swap for K high PT on Pendle, and then you borrow against it on Felix, and then you do the loop again a few times just to like maximize how many points you're getting from like Kinetic and Felix and whatever other hyper EVM protocols. So I did that a little bit. I do think Kinetic's pretty big. I just posted about how they reached like 1.1 bill in TVL in about 3 weeks, and it took Lido like 5 months to do something similar. There's a lot of momentum behind like hyper EVM protocols just because everyone's who's like .hl is very well they're both very sharp and probably good yield farmers. And they're very strategic about like what things they farm, but they're also pretty internally bullish on most of the DeFi protocols. I don't know how well some of these will play out. I do imagine the ones that are like quote unquote more aligned with like the ethos will do pretty hefty allocations to retail and to early participants. So I don't know. It'll be something to watch. I don't know when the first airdrop hits from one of these, but I imagine it would be kind of closer to the end of the year, so we can pay more attention to them then. But yeah, on chain wise, that's still about all I've been doing. I've been paying more attention to perps since all of these like older Dino coins have been moving a lot. So that's been a little bit more interesting.
Kenji, what are we doing on chain?
We're all the same. We all do the same things. Playing around with perps on hype. I downloaded Zora to see if that was a game that I might be pretty good at. Quickly came to the conclusion that it's not, so I don't think I'll open the app again. Also been playing around on hype EVM. Like, it's not that interesting, but I don't think everyone should be looking at like where should I get yield on stables at this point in the market. But I think hype EVM is going to consistently have some of the highest yields, just because like there's not a lot of places to get liquidity on your hype bag. People are going to want to borrow more because they want to farm all the airdrops. And then also, I think there's an interesting dynamic where hype EVM probably has more perp traders on it than most other like L1s. So I'm curious if like borrowing stables against hype on the EVM, there's a floor there based on whatever the hype funding rate is. Could be kind of an interesting arb for people to play. So mostly looking around there. Want to try playing around with Boros, but I think we're all kind of in the same boat.
And to wrap it up, Chris, what are we doing on chain?
Yep, doing the same as them. Doing a little hyperliquid perps, doing some Zora. Checked out. I had the Zora app download forever, but I was like, okay, I gotta circle back to this and check it out. And I've been getting back into abstract now. It looks like the ecosystem is really starting to heat up, and I feel like this is a really good time for people to start paying attention. Seems like there's more liquidity coming in. Like the TVL has been up and to the right, and one of the interesting games that just dropped was the proof of play arcade on abstract. So proof of play creators a private nation, do a lot of infrastructure. And it makes sense because they've been doing a lot of the verified random number generator infra for projects on abstract, especially some of these more like kind of casino-y games. So they're officially coming over. They've got some great people building. And so I've been just checking that out, playing that a little bit. And yeah, just, I have a little bit of time right now. So I'm trying to get back into the games, get some XP. And yeah. That's pretty much it.
Can I show the game I like on abstract?
Oh, yeah.
Death Got Fun. It's so much fun. It's so stupid. You just click tiles and you lose money. But you think you might make money. You could make money, but you probably won't.
I risked my whole Ret Spa bag on that, which was like super small. It was like I had like $50 in it, died, and then Ret Spa did like a 50x. That was awesome.
Likely many such cases.
Love to see it. I guess what I'm doing is still waiting for my Solana mobile seeker. I'm seeing some people get it, so I can't wait for my email to get that confirmation, play around with some of the mobile dApps. A ton of campaigns and hackathons to incentivize mobile apps, which I'm excited to see crypto go more in that direction. Also, still waiting for my PSG1 Game Boy. Same thing, hardware is fun. And then something that I've been writing a couple reports about and looking to get more into is Shaga, using like decentralized cloud computing gaming. Cloud gaming, which is pretty exciting, especially with gaming becoming more legit on chain and stuff. So I think that could be something to look forward to. I think they might TGE soon, which is pretty exciting, and get more into that. But But yeah, same as everyone else. A little bit of perp trading, getting liquidated, airdrop farming for hype, round 2, and then also the Zora, playing around with Zora a little bit, and that's been pretty fun. But this has been a great episode of Shoot the Shit Pod number 11. Do all your normal stuff. As always, this is not financial advice. Do your own research, which in your own research, you can go to Messari.io, read all our reports. All these guys, fantastic reports. Keep looking forward to more and more of those as Sam ramps up officially on the enterprise team now too. Gonna be excited for his official number 1 report. And then like, subscribe, follow, retweet wherever you're at. And thank you guys, and we'll see you in a couple weeks.